Good evening, Stephen. Indeed, a happy CEO Nedbank says these latest results are, of course, a demonstration that both household and the economy have held up well despite the backdrop of Russia's invasion of Ukraine wreaking havoc in markets worldwide. The bank's net interest income climbed by 9% to 17.2 billion rands, bolstered by rising interest rates. Nedbank's corporate and investment banking unit accounted for almost half of the group's earnings, bringing in just more than 3.2 billion rands in the 6-month period. Mike Brown says the recovery from COVID-19 is well underway as their dividend payout is back to pre-pandemic levels.
If we look at the 6-month period to June, it very much feels like two quite distinct quarters. The first quarter of the year started actually with some tailwinds behind the South African economy as global growth generally finished last year better than expected, and commodity prices were higher than expected, boosting terms of trade. And as you will know, in the first quarter, GDP actually grew quite strongly by 1.9% quarter on quarter. And then really in the second quarter, some quite material headwinds emerged in the global economy, primarily as a consequence of Russia's invasion of the Ukraine and the impact of that on inflation going up faster than people had expected, interest rates going up faster than expected, then compounded domestically, as you rightly said, with the floods in KwaZulu-Natal and the load shedding. So, I think you've got to sort of look at it in the round of all of that. And certainly we were very pleased against that backdrop to produce 27% growth in earnings, and I think importantly for shareholders, an 81% growth in the interim dividend.
And when you look at Nedbank's credit loss ratio, that bad debt ratio, that was also flat. What does the flattening reflect in terms of how your clientele is doing in managing their debt with the bank?
I think there are quite a few moving parts underneath that. And first and foremost, during the COVID crisis, all of the banks, including Nedbank, raised material provisions on our balance sheet. So we have large buffers in our provisioning to offset any deterioration in the underlying client base. Certainly, if we looked at our retail client base, they've held up actually well. They've been very resilient. Overall debt service costs are down over the last few years, and overall debt to income ratios in the retail side are down. Although we are starting to see pressures emerge, not surprisingly, in the lower entry level and LSM environments where those inflation rates, in particularly around food and fuel, take a larger bite out of disposable income.
Let's talk about the Nedbank's profitability. That has also been demonstrated by in the return on equity ratio being at 13.6% when it comes to the last period and compared to the same period in the first 6 months of last year, which was at 11.7%. What does that demonstrate for your shareholders?
Yeah, we certainly pleased with the continued improvement in ROE to 13.6, but we're certainly not happy with where it is in absolute terms. And, we're aiming to get that ratio to above 15% by the end of 2023, which is roughly equal to our cost of equity, and then 3 or 4% higher than that in the longer term. So it does reflect improved performance, but we're certainly not satisfied with where it is.
And you spoke briefly about this. There was yet another 75 basis point hike a few weeks ago by the Reserve Bank, with 2 more meetings still to come this year. What are your expectations for September and November meetings?
Yeah, so our current view is that inflation is likely to peak in the third quarter at somewhere around about 7.8%. Now, inflation, most people have underestimated that for a while. But if that is the case, we still think that we will have another 75 basis points of rate hikes this year. I wouldn't want to guess in what proportion at which meeting. And then probably still another 75 next year. And while interest rates are generally negative for stock markets. It's more the long-term interest rates that drive stock markets than the shorter end of the curve through the cost of equity. And certainly for banks, actually, upward interest rate movements do provide some buffer to profitability through what's called the endowment effect in our own capital. And that is, a source of income to offset the higher bad debts that are likely in a higher interest rate environment.
And you've also had a look at South Africa's economic outlook, which has been revised down and up, mostly negatively in the past few months. What are your expectations for the 2022 GDP growth rate for South Africa as things stand right now?
So after that 1.9% quarter-on-quarter in the first quarter, we're expecting that the second quarter, given the impact of very high levels of load shedding and the KZN floods, the second quarter we're expecting the economy to contract, and then over the full year to grow, but to grow 1.8% this year, and then somewhere around about 1.5, 1.6% over the next 2 years. That really shows the binding constraint on economic growth from the challenges that we have in electricity supply, as well as the slow pace of structural reform in our economy. And it's absolutely vital that the President's Energy Action Plan is not only a plan, but is implemented on time and delivered. Because without that, it's just simply not possible for the economy to grow by more than around 2%, as load shedding is hugely negative to sentiment, investment, economic growth, and jobs.
And before I let you go, Mr. Brown, that particular plan that you have spoken about by the President actually brings in a lot of private sector activity and participation in power generation. Are you, as Nedbank, now have been readying yourselves for what is set to be an increase in private households looking to actually fund their own getting off the grid, looking to fund those initiatives where they can actually fund their own power generation through inverters? Are there tools that you've set for your clientele in order for them to access that sort of funding to circumvent load shedding, as those who can certainly afford it can actually do so right now?
Ronnie, absolutely. We think that helping our clients in financing the energy transition that's underway in South Africa is a multi-year growth opportunity for Nedbank, both on the retail side. We've actually just launched now a solar product solution for clients, but probably more materially on the wholesale side, where almost all of our large clients, in particular on the mining front, are involved in some form of embedded energy generation project.